Hey guys, we've got ticker NOGN hitting the scanners. You guys can see it if I pull the scanners over. These are our post-market scans. You can see that on NOGN is hitting the post-market scans, letting us know there's a little bit of volume, not a whole lot of volume today. But what we want to look at is these key levels. So if I'm trading confirmation and the strategy that I trade every day live in voice in our Discord, then what I'm looking for is to mark these levels of resistance and then look for an area to possibly get in. So I want to see a resistance break and then see it then hold as support. We can see that we have these three purple levels here. That's my resistance. So we can see it's a little cluster of resistance here. So what I want to see is a close over that level. So we're going to watch this trade here on NOGN. See how it works out. Make sure that the audio is not still on. It is. So let me turn the audio off. So NOGN, you can hear all over the scanners. Now you can probably hear me talking. We want to see it close over this level. It still has not done so yet. It's getting a lot of volume. It's getting a false breakout, but we want to see it close above. Now it closed above there. So this would be our signal that this is now going to be holding a support. So we could get in with the idea that we can add into this level, and this would be our target, right? And so we closed above that level right here. So if you got into that close and filled that gap, it'd be about 10% on your total trade. Right? If it dips down and we're able to lower our cost basis down into this area, then we could add into these dips, get filled into that level, and we can get our 13% trade. Now we're going to watch this NOGN to see if it pans out, but that is confirmation trading. What we're looking for again is for it to pop on our scanners. And again, if I pull over the scanners, you guys will see that that's the only stock that we have pretty much on these scanners right now. NOGN showing very high volume, and that's because of that white candle there showing, let's see, just about 200,000 shares on that candle. So this is a very important scanner. We also have the high of day, post-high scanner. And you can see NOGN, SMX, and GCTK are the only ones on here. NOGN alerted at $2, and it's now hitting highs. So we can see that on this scanner, 229 is the high. So here's our add. We add into that dip, right? So we bought at this close above here. So this is a green candle. It's hard to see. I'll turn the volume candle off. So green candle closed above, right? Get in. Add into this dip. So now we have our average somewhere around here or close to that 212 level. Of course, if you waited for the pullback to the 212, well, maybe you had a better entry. Maybe you don't have this fill here in the average. So if you bought here and then it came down to here, you'd have an average in this area somewhere, right? So again, the theory is if we're going to get to 241, we're going to get to 250, 260 targets, we have to stay above this level, right? That's confirmation. So NOGN has to close above this level and stay above this level. And see how it tested here, and now we're going back up. Want to see this jump up and hit that target above. And let me go ahead and set an alert on this as well for our team in Discord. So I'm just going to add this one over to here. And there we go. So now I have an alert that will be sent to our Discord as this one goes up. So we have that set on NOGN. I'm going to pause that for now, but it needs to hit 241, needs to hold 212. So again, we're in the trade, right? We added into that dip. We're somewhere in here in our cost basis. And sure enough, we were up about 7% on that move. Now we could take profit on something like that, especially because we have all of these red arrows, which is the BBRSI indicator letting us know that it's pretty overbought. So there's oversold and overbought indicators. This one is telling us that it's a little on the overbought side, so could use a little breather. Well, here's that breather now. We're seeing a major red candle, that pink candle being posted. As long as it stays above the 212 and 208, we're going to be okay. That's what we want to see. So again, we'll just be adding into that dip, and if we already have our full position, we wouldn't be adding anymore. So again, trading the confirmation strategy, we look for this level to now hold and look at the next level as a target, right? So 241 is the target. So nasty candle there. A lot of traders would be shaken out of their trade there, and that's absolutely fine. That could happen, right? It really depends on your risk tolerance, the size of your account, things like that. But if you're holding out for the higher level above, which is that 241, you're looking for this gap to fill as it has not filled yet once before. We're looking for it to hold this 212 level, get a little bit of volume, and pop right back up to the 241. Now, if it closes below the 212 or below the 208, that's when we would bail on the trade. Now, we don't want to get caught in a nasty knife. So, of course, if it starts to come down, we feel uncomfortable. We could always bail a little bit earlier than waiting for that close. And the reason we would do that is because we know this is not a high quality setup because of the price being under $2 to start with, and the fact that we now have that major red candle. So, a few things to be concerned about. We can see that nasty look right there. Has not closed under yet. Closing here in 2 seconds and closed under. So that's where I'd bail on my trade. And so if I was adding to that dip and my average was around here, well, I just took myself a loss. So if you closed out at that close below, that's about a 2%, 3% loss from the average cost base that we're in, right? So now, again, we're looking for it to close above the 212. And the reason I would exit here on this candle is because for me, again, the theory is if it can't hold 212, then why would I expect it to get to 241? Now, here's a trick. We are looking for it to close back over that level, and we have not filled that gap yet. So we want to see that paired with volume. So if I see that paired with volume, it's a trade that may be worth taking. If it closes over with low volume, then I'm not sure it's going to fit my risk profile with that major red and that low volume candle closing above. But if we close over 212 paired with volume, we could take that trade with the same idea. It needs to hold this level and get its butt up to that 241. Yeah, 6 would be great, right? So I would exit from that candle. And as we can see, it's continuing down. So I'd save myself a major loss or a further extended loss. Now, again, we can always get back in the trade. And this is what a lot of traders struggle with. They throw the kitchen sink at the first trade. It ends up going against them. And then they get frustrated and they're not there when all of a sudden it goes up without them. So the way to avoid that is by actively trading the confirmation strategy. So every time it closes above this level is when we start watching. So if that's the level that we need it to close over and it hasn't done so yet, then why would we sit here watching this? We wouldn't. So I go ahead and I just, to save everyone time, you just come in here, you right click, you add an alert, right? And that's it. Create the alert. And now we have a price alert right on that chart that's going to notify us if it starts to get close to that 212 level. And I want to do that before the level. A lot of traders will do it right on the level. I like to do it right before the level. And the reason for it is because then I'm notified ahead of time and I can really get my everything, my focus ready and set so I can go ahead and take the trade with full size. Otherwise, I'm scrambling around if I get the alert later when it starts to close above this level, and I'm not really comfortable throwing the kitchen sink or taking a large size if I don't have time to assess these conditions beforehand. So we've got a cluster of resistance. Yes, we closed above, and yes, we made some money. Of course, if someone bought this close above and scalped into this these highs, sure, there was money to be made. If you bought the close above, which this is the first close above, you get up to there, you're looking at about 5% on that trade, which is not bad. Really, it's 10 cents per share. It's not crazy, but not bad, right? Nice little scalp, but it didn't work out. There's a close below. That would be a fail, and that's where I'd bail on the trade. Now, of course, it's frustrating to bail on that trade, but it's a whole lot better to bail on this trade here rather than hold and add into these dips, because at this point, it's not bullish at all. It's not going to be considered bullish until it at least closes above 212. So why would I hold on to my position? I'm not looking to hold on to these bags overnight. I'm not looking to swing trade. I'm a day trader. I'm looking to get in and out of my trades within minutes oftentimes. And if it doesn't happen within minutes, then oftentimes that's my red flag. So NOGN did not work out, and that's absolutely fine. We can see with these candles leading up into it, we closed above. It did offer that 5% little scalp. But for me, I would probably take a loss there. Now, I wouldn't be willing to take this trade because this is in the post market. And for me, the post market, I don't really love trading in the post market, right? So, but this is a good example of an active chart during regular market session or regular hours. So right now it's, what time is it? 4:18 p.m. Eastern time. So again, close below, bearish, close above, bullish, and we have this major red. So now if we close above, we have this major red to consider and know that this is not going to be an A+ setup. Sure, the gap is attractive, but I don't want this gap right here to overshadow my strategy. So bail on the trade if it goes against me, and can always live to fight another day, and can always come back tomorrow and possibly trade this one if it gets over here. Now, again, I would be interested if it gets above these levels. We've got the 241, then 250 would be the mental level, then 260. So maybe I'm a little bit more open to trade this gap above the 260 because as we can see, it's a huge gap, right? And I don't think that that gap's going to fill completely, but we can look at half and whole in between. So if I'm looking for 260 to $3 and we go ahead and measure that gap to 3, It's right around here. That's about 14%. That's worth my time in taking the trade. So maybe I want to be notified beforehand. So I go ahead and set an alert before that move happens. So now I have that price alert at around just before the 250. That way I can get my head on straight and be comfortable and be focused on what size I want to take on this trade. So if we have this set up in the morning, I may take that trade, but it really depends on if we see conditions like this one here or if we see a bullish vertical trend. So guys, I hope that helped. That's on ticker NOGN. It was hitting the scanners in the aftermarket and pretty much died down. You guys can see it hit the post-market scans at $2. Went up to about 230. We can see on the chart here. It went up to 230 exactly and retraced from there. So about a 30-cent move, but did not work out for confirmation. That is a fail, and that's absolutely okay. Again, very low volume. We can see that in these candles. Yellow candles are low volume, white candles are high volume, and pink candles are going to be those major reds. That's ticker NOGN. I hope that helped. Guys, I'll see you in the next video. Thanks.